To achieve a monthly income of $100 from dividends, several factors must be considered, including understanding what dividends are, selecting appropriate dividend-paying stocks, and calculating the necessary investment. This comprehensive guide will explore these topics in detail, providing you with a clear path to achieving your financial goal. Benefits of monthly dividend income. Dividend investing is a popular strategy for generating passive income. Dividends are payments made by companies to their shareholders, usually from profits. They provide a steady income stream and can be a critical component of a diversified investment portfolio. Consistent cash flow is one of the key benefits of dividends, as they provide a regular income unlike capital gains, which are only realized when assets are sold. This regular income contributes to financial security by helping to cover monthly expenses and reducing reliance on employment income, thereby providing greater financial stability. Additionally, reinvesting dividends can accelerate the growth of your investment portfolio through the power of compounding. Selecting monthly dividend stocks for my spreadsheet. To achieve a monthly dividend income of $100, you need to carefully select dividend-paying stocks, understand their yield, and determine the necessary investment amount. Not all stocks pay dividends monthly. In fact, most pay quarterly. However, some companies and funds distribute the dividends monthly, which can be particularly advantageous for investors seeking regular income. When selecting suitable monthly dividend stocks, I focused on several key parameters to ensure a well-informed investment decision. Firstly, I considered the 3-year yield to evaluate the stock's average dividend yield over the past 3 years, providing insight into its income-generating potential. Specifically, I looked for a 3-year yield greater than 3%. Next, I examined the trailing 12 months total return to understand the stock's overall performance, including both price appreciation and dividends, aiming for a TTM total return greater than 10%. The payout ratio was also crucial, as it indicates the proportion of earnings paid out as dividends, helping to assess the sustainability of dividend payments with a preference for a payout ratio less than 60%. Additionally, I look at the 3-year revenue compound annual growth rate to gauge the company's revenue growth over the past 3 years, targeting a 3-year revenue CAGR greater than 10% and a 3-year net income compound annual growth rate to understand its profitability trends, also aiming for greater than 10%. To narrow down to a specific stock based on my parameters, I need to sort and filter the data. First, I sort the first column from highest to lowest. I click the arrow and choose Sort Z to A and mark in green all companies that have a 3-year yield greater than 3%. In the next column, I do the same, but mark companies that have a TTM total return greater than 10%. For the next column, I sort from smallest to largest and mark in green all companies that have a payout ratio less than 60%. For the second to last column, I sort from the highest value and select companies that have a 3-year revenue CAGR greater than 10%. Lastly, I sort from the highest value for companies that have a 3-year net income CAGR greater than 10%. Now, to display only the selected companies in the table, I click the arrow and choose Filter by Color, Fill Color and Green. I repeat this process for the remaining columns. Finally, I see that the narrow selection of stocks includes Gladstone Investment Corp ticker GAIN with a market cap of $511 million and a price of $14 per share, and Main Street Capital Corp ticker MAIN with a market cap of $4 billion and a price of $49 per share. Calculating the required investment. To determine how much you need to invest to achieve $100 in monthly dividends, you need to consider the dividend yield and the desired monthly income. Here's a step-by-step guide to calculating the necessary investment. In the detailed view of the GAIN stock, you can see the 5-year price trend. At the bottom in the forward dividend and yield row, the stock has an annual yield of 6.88%. Similarly, in the main stock, the 5-year price trend shows an annual yield of 8.40%. Let's do the math. Your target is $100 per month, which translates to $1,200 annually. To calculate the required investment for each stock, you use the formula. The required investment is equal to the annual income divided by the dividend yield. For GAIN stock with an annual yield of 6.88%, the required investment is 1,200 divided by 6.88% equals $17,442. For MAIN stock with an annual yield of 8.40%, the required investment is 1,200 divided by 8.40% equals $14,285. In conclusion, to achieve $100 in monthly dividends, you need to invest approximately $17,442 in GAIN stock or approximately $14,285 in MAIN stock. What stock would you invest in? Given the price trend and the smaller investment, I would choose GAIN stock. Should you invest all your money in one stock? Of course not. Investing all your capital in one stock exposes you to significant risk. Although focusing on a single stock like GAIN or MAIN can seem appealing due to their attractive dividend yields, it's crucial to consider the benefits of diversification and maintaining a well-rounded portfolio. Even with thorough analysis, predicting the future performance of a single company is inherently uncertain. Unforeseen events, such as changes in market conditions, industry downturns, or company-specific issues, can drastically affect the stock's performance and, consequently, your investment. Diversification, on the other hand, spreads your investment across multiple stocks, sectors, and asset classes, which mitigates the risk associated with any single investment. By holding a diversified portfolio, you reduce the impact of poor performance from any one stock and increase the likelihood of achieving more stable and consistent returns over time. Moreover, a well-diversified portfolio can enhance your investment opportunities. Different sectors and asset classes often perform differently under various economic conditions. By diversifying, you position yourself to benefit from the strengths of various market segments. For example, if technology stocks are underperforming, your holdings in healthcare or consumer staples might be performing well, balancing out your overall returns. In a sense, diversification not only protects your investment from substantial losses but also provides a more balanced and potentially more profitable investment strategy in the long term. As you can see, achieving $100 in monthly dividend income is a realistic goal. By understanding the basics of dividends, selecting high-quality dividend-paying stocks, calculating the required investment, and building a diversified portfolio, you can create a steady stream of passive income. Remember to monitor your investments and adjust as needed to stay on track toward your financial goals. Thank you for watching. If you found this video helpful, please give it a like and subscribe to my channel for more insightful content on investing and personal finance. I have many more exciting videos lined up that you won't want to miss. Take care and invest wisely.